Welcome to the Point of No Return podcast, a show at the intersection of technology and strategy. On this show, we interview industry leaders and experts to better understand how they think about strategy during this time of exponential progress.
Hi everyone, welcome back to the Point of No Return podcast. I know it's been a few weeks since our last episode, so apologies for the delay. Things have been pretty busy, but today I have a very special episode with Sam Kawtharani, Co-Founder and CEO at Corl. Sam and I have been bouncing, we're supposed to do this interview a few weeks ago, even late last year, I believe, but schedules got in the way, and so I was really happy that he took the time today to sit down and talk. Corl's doing some very interesting things, and to be honest, I learned a ton about a space that I thought I already knew a little bit about, which is the cryptocurrency and funding space. A little bit about Corl. They're a data-driven VC firm, and I really like that expression. We get into how they fund early-stage startups. It's a very data-driven approach, where they look at how much a startup is earning. They look at metrics like the management team and their backgrounds to make funding decisions. Sam himself has a very interesting background where he came from the Middle East after having worked there, started working FinTech in Montreal, and then decided to start his own company and got the entrepreneurial bug, which led him to the founding of Corl. He recently moved to Toronto, and we speak about that move. We speak about the regulatory environment in Canada and the US versus other more mature markets in his estimation. We speak about what Corl is doing quite in depth as well. So like I said a little bit at the beginning, they're doing some very interesting stuff when it comes to early stage funding. And then we speak about the industry and where he sees the use cases, the real first use cases coming for blockchain. So in things like credit scoring, identity, and stable coins. So we speak about what it will take for mass adoption to happen for real. And like I said, this conversation was very interesting, and I hope that you enjoy the show. I'm really happy that we found the time. I know we had some scheduling issues at first. I really appreciate that we found the time to sit down and chat today. So I just want to say thank you.
No, and apologies, as I said, it's been hectic at the end of the year between work and personal matters. But I'm glad to be on this podcast today.
So I'm happy Amina put us in touch so we can connect today, and I'd love to dive into what you guys are doing at Corl. I find the space really interesting. But before we talk about what you guys are doing at work, I want to go and talk a little bit about your career and talk about how you got to where you are today. So maybe just first question out of curiosity is how did you get started in tech?
It's funny. I find myself in fintech not intentionally, but originally I was a software engineer. And started in product management right after university. My first kind of dabble into product management was in the media sector and more automating the media, publishing newspapers and magazines. But the next thing I know is I moved to Montreal, and here I am. I'm part of this fintech ecosystem before even fintech got popular. So I started at the payment processing industry with Pivotal Payments, which has now been branded to Nueve, and Goldman Sachs pretty much acquired the majority of it. And shortly after, I got my first experience with peer-to-peer lending and regulations in the industry. So I joined Canada's first peer-to-peer lender, IOU Central at the time, rebranded now to IOU Financial. But I was employee number 4, joined as their head of product, and by 2012, I took the company public. By the time I kind of started getting that entrepreneurial bug in 2016, I left them having $500 million in assets under management. And since then, that opened my eyes on the fintech ecosystem and how to innovate more and how to find better ways of improving the financial system itself. And that's what led me to Corl today.
Very cool, man. Yeah, very cool. Well, you seem to have skipped over a few parts, so I want to dive into specifically the how and the what got you interested into wanting to start your own company. But before that, I also noticed on your profile that you were a scuba diving instructor for a few years, if that's correct.
Still am. Yeah.
Oh, wow. So, I guess 2 questions. One, why scuba diving? It was always something, it's a bucket list item for me. And 2, is there anything that you've taken from that sport that you think is applicable to business, or there is no similarity?
I mean, I've always been fascinated by water, the ocean. I do consider myself. My friends call me the island bum. I'm a beach person, but I've always been obsessed with being around water. Right, so I'm like, if you take me to the beach, I'm the last one getting out of the water. I'm not sunbathing. So, but I started by working in the Middle East, Saudi Arabia, Dubai, Egypt for a while, and I had luxury of being around the Red Sea and the Indian Gulf, Persian Gulf. And I just started with snorkeling, and next thing, I just want to go deeper and deeper. I want to know more. And I just got the scuba diving bug, let's just call it. But it's mostly the only place where I can get my Zen going, right? It's complete disconnection. It's me, no matter what's going on in my life. It's the only way for me to kind of calm down. Next thing, I find myself doing cave dives now, and then I'm teaching new students scuba diving. So it's good. I wouldn't say it's business. I mean, although I do make money when I teach, but for me, it's always been a hobby, right? So I never looked at scuba diving as a type of business as much as been a hobby, even when I'm teaching. And it's more of a passion. So that's kind of what keeps me sane with the whole entrepreneurship route that I took.
Yeah. Do you think there's any lessons from being in scuba diving that you think are applicable to running a business?
Yes. So like there's a couple of things we know, like situational awareness. So like when you dive, you need to know that you're new to this environment. You need to know what everything is what's happening around you and be careful. I would say it's the same thing in business, right? You would need to know your industry. You need to be competent about what you're doing. You wouldn't jump into a business that you don't understand the same way you wouldn't go diving in an environment that you're not trained for. I think it's that's a similarity that I would compare the two.
Yeah, that's a pretty good point. Because if you're going into a cave, and like for me, it's like it just sounds like so frightening to like not have any light and or be so far away from the surface. The notion of understanding, mapping your current point in space before you go into that cave, I think is a very good analogy to, like, where you're going to drive your company forward, right?
Yeah, exactly. I mean, it's part of planning and making sure you have redundancies or you have backup plans and emergency plans for your business or for you as an individual if you're diving, right? So I would say that's kind of, I would say as much related to diving and business. It's more than as much as life lessons that always be prepared for whatever you're jumping into.
Yeah. So you spoke about getting the bug, right? So getting this entrepreneurial bug, is it something that you always wanted to start a company, or was it something just from being more involved in different companies that kind of grew on you?
I think it's a natural path in your career. I've been an independent person from the start, right? Even when I did work as a product manager, I did have that flexibility to kind of own the product and the vision. But at the end of the day, you're always clashing with the strategy of management, with the board of directors, and you're limited. And I'm not the kind of person that will do a 9 to 5, pack my stuff, and go home. I never thought that I would start my own company. I thought that the idea is great. I would love to do it one day. And then just one day I woke up and figured, okay, whatever I'm doing right now is not adding value except for making my boss richer. And I don't feel like I go home and I say, okay, well, today I did something. And that was what kind of triggered the whole, I need to start my own thing. Not because I wanted to be my own boss. I don't think you're your own boss when you start your own startup. You're at the bottom of the chain. But the thing was mainly that I believed in a problem and I didn't think the people I worked for or the other potential people that could hire me are solving it the right way. And I figured that the best way is to start on my own and build my own team around it. And that's been the main driver for me on a day-to-day basis, right? And the day I stopped believing in the problem and the solution for that problem is the day I would stop, for example, running my own company, right?
Yeah. Yeah, no, it's a great testament to how you approached it. So yeah, very much respect and relate to what you mentioned. And I want to dive into how you got the idea for Corl, but maybe one last personal question. Considering we both have Mediterranean origins, so why Canada? Why move to Canada?
It's funny because when my family was preparing for immigration in 2007, I was completely against it. I was happy. I had a job in the Middle East. I was traveling with my company around the world. I had what any Middle Eastern young individual would hope for, right? So I was like, stable job, stable life, which you don't get a lot in the Mediterranean or in the Middle East, right? Depending where you are. So, but the next thing is like we moved to Montreal because mainly my mom's family has been in Montreal for the past 30 years. And so that was more logical. Canada's immigration system was way more open-minded compared to the US or other European countries, but mainly because we had family here, right? So that was the main driver, and Montreal became home.
Yeah, that's great. And what was your biggest difference between the business environments that you see, considering that you spent significant time working in the Middle East? Like, what do you think is the biggest cultural difference from a business perspective in your?
Well, I think the first thing is that idea of going and starting your own business. I think we're not raised in the Middle East to kind of take that many risks, or maybe few people do it. Like you're expected to go to start a job, have a stable life, get married, right? And meanwhile, here it's a completely different mentality. That's not normal, right? So, like it's more risk taking mentality, like which is more encouraged for a lot of folks. Part of that kind of opens your eyes on what you can do in a certain country and what you can. But even before starting my own company, just talking to certain folks in the industry, I've had fellow product managers in the Middle East, people who graduated from university with. The amount of knowledge that I acquired over the years being in Canada compared to the amount of knowledge they acquired is huge. The industry itself moves way faster than there. Probably not anymore. It's probably Dubai and Saudi Arabia, for example, and other areas in the Gulf are moving as fast as the rest of the world. But just the amount of exposure to certain things. I remember the first time I mentioned to a friend of mine who works in Dubai, I was like, yeah, I joined the FinTech movement. And I was like, what's the FinTech movement? At that point, it didn't exist, right? I have this thing where North America is 5 years behind Europe and Europe is 5 years behind China. And I think the Middle East kind of fits somewhere now between North America and Europe from an innovation point of view.
Yeah, that's interesting. So how I feel that, innovation is happening in all these other interesting pockets sometimes. So, and I feel that we have a lot to learn, particularly in Canada, from these spots. And so you mentioned FinTech. So you were working a lot in FinTech, kind of haphazardly that you mentioned. What gave you the idea to start Corl? And then we could talk about what is Corl's mission as well.
Yeah, so part of my work at IOU, I kind of noticed that what we've been doing in FinTech hasn't been enough. We've all been targeting how to make businesses raise money faster or in a different way. But we haven't been targeting the product itself as much as we've been targeting the customer experience around it. So FinTech started mainly with the online lending space after the financial crisis when banks stopped lending. So what we did is that we kept the same product of term sheet loan. We're doing higher risk business or riskier businesses, and we just have like a nice online application. But that still left that gap in the market. You still didn't address the minority funding problem, the women gap funding problem, or just for startups that don't qualify for VC money or can't get debt because they don't have assets or collateral. And that was the main driver for starting something like Corl, because I wanted to focus on addressing a new problem by solving it in different ways. So not about just doing technology, but also finding a newer way around it. And that's why Corl came to life based on the concept of revenue sharing. Working at IOU, I saw a lot of businesses get turned down, although they were good businesses, but the product wasn't a right fit for them, right? And I happened to work with Kevin O'Leary at Shark Tank as part of a pilot project at IOU. And that kind of exposed me to the concept of revenue sharing or royalties, which Mr. Wonderful loves a lot. And that kind of opened my eyes. I was like, okay, there's different funding models for startups and small businesses in general. And as I started getting into it, I fell into that rabbit hole, as we say.
Interesting. Yeah. So how do you guys go about tackling that at Corl? Because it seems like you're trying to democratize the funding and being able to have this different model that you said exists, but not specifically when it comes to tech startups, right? So revenue sharing and royalties to really go after an underserved segment and really provide capital. So curious as to how exactly you guys go and do that.
Yeah. So what we've done is we basically addressed it by just adding the concept of revenue sharing. So instead of having a dilutive option for fundraising, some just like equity, we understood that model does not work for everyone else. 99% of businesses kind of fail. Don't get VC funding. And then VCs are always looking for the next unicorn or the next big deal, and leaves a lot of businesses without any funding on the table. And that's not necessarily because the business is bad as much as that the model does not work. There's a good business, but it's not going to be a 20, 30x business, or it's not going to exit. An on-demand flower shop that makes 50,000 MRR does not necessarily have an exit strategy for a VC, but it's a very good business that could be funded. But because they don't have assets, they're never going to get a loan. So the concept of revenue sharing that we came up with is we'll deploy the capital in the business, and then they pay us back through a percentage of the revenue until a certain period.
Interesting, yeah. And when you came up with this idea, and you're like, okay, this is like how we want to approach it. How did you go about building the company? Was your first idea was like, I need to go and raise some capital on my own to go and get a team? Or did you bootstrap it?
We bootstrapped for a long time before we got venture capital, right? So a lot of the funding that happened was friends, family, angel investors at the beginning. But majority of it came from Derek and myself as founders and friends and family, right? We pretty much bootstrapped the business till almost end of last year.
Okay, great. Well, congrats, man. And now I know we were supposed to meet in person in Montreal, but now you've recently moved to Toronto. We won't talk about hockey on this podcast. So just curious as to what business reason brought you to Toronto.
So my co-founder first is in Toronto, right? So Derek is based in Toronto, and our developers were based in Montreal early on, but most of our sales, biz dev, marketing were in Toronto. So I was commuting back and forth a lot to be with the team. Most of our investor meetings, our financial partners were in Toronto. The big events that we wanted to kind of network were here. So I ended up living on Via Rail for a big chunk of the year. It just made sense. Like from a financial, considering Toronto is a bigger financial city, it just made more sense for me to move here. Things are moving faster. And I noticed that being with the team in the same room keeps the momentum going, and it's more optimal.
Yeah, no, for sure. Working remotely, especially as CEO, I imagine that you need to be.
Yeah, because I can turn around or in the office and discuss things last minute with Derek or the rest of my team, compared to having to organize it or missing some conversations that are organic at the office. So that's one advantage we have.
Yeah. So that's why I'm not personally a huge fan of remote working. I think it works, but it's companies, let's say like a WordPress, that are the exception that prove the rule. Like you need to have a very special kind of culture where working in a distributed fashion makes sense. I think for most startups, particularly more early stage, you need to have that shoulder to shoulder kind of environment where, like you said, a lot of the conversations are organic. A lot of the decisions end up being organic, not in these pre-planned meetings or hangouts.
Exactly. Yeah, decision makers need to be in the same room. It's okay to outsource your developers. I mean, we have developers in Poland, but Derek, myself, our management team is in the same office.
Yeah, no, it makes a lot of sense, especially when it comes to the Canadian market from a finance perspective. Yeah, I love to, I'm obviously proud Montrealer, but I have no illusions to, when it comes to where the center of the economy is, particularly finance, right?
And I think talent as well. Toronto's been attracting more talent than Montreal. I don't want to be political, but I think the whole English versus French in Montreal hasn't been helping with our technical abilities and attracting international skills. And Toronto's been doing that, right? So I remember putting a job post in Montreal. We'll wait for a month to find a proper junior candidate. In Toronto, I'll interview 6-7 people in a week if I want to.
Yeah, no, I definitely agree. It's just a larger market. There's more cycles, there's more people. So, it makes a lot of sense, particularly in your sector. I want to go back to the how you guys do it, right? So, one of the areas you guys are focused on is in terms of expediting the funding process, right? So, no long approval times, finding funding very quickly. So how exactly does your model work? How do you achieve this type of rapid cycle? And obviously this kind of limits the persona type, the client persona type. So curious if you could dive into it and unpack it a little bit.
Can you say the persona of what our clients you mean, or the businesses we're helping?
Yes, for your customers, so the companies that you're funding.
Yeah, so we look at companies that are more have an online presence and they have light assets. They have a $10,000 in monthly recurring revenue and healthy margins. That's usually the type of business we look for. Mostly like SaaS or e-commerce companies are the best fit from a persona point of view. But again, we're very industry agnostic. As long as you show that recurring revenue model that you have, that's a fundable business from our side.
Okay, so it needs to be a recurring model. What if it's like e-commerce, for instance, where it's not, let's say, a SaaS, right? Was that something you'd be interested in?
So an e-commerce would still work for us, right? We have integrations with Shopify, for example. But if you're an e-commerce business and you're showing that consistent sources of revenue on a monthly basis, that's still good enough for us. So if you're showing that you have 50,000 in revenue coming in at least every month, even if it's not the same people that are doing that, that's still a good model for us.
Yeah, yeah. And how does your technology stack work? Like, what data are you pulling in to be able to make a funding decision so quickly?
So we've automated the process to take an online application within 5 to 10 minutes. As of today, we have around 10,000 data elements in our applications, right? So we're able to gather 10,000 data elements on each business, from banking data, accounting data, payment processors. We also do online scraping of marketing data. So and all of these basically to allow us to gather a quick automation and due diligence package on each business we fund, and that's basically what drives the quick within 2 weeks response for each business we fund. Right, instead of waiting 6 to 9 months for a VC, we do it within 2 weeks.
Oh, wow. And then is this very similar to what, let's say, Social Capital is doing? I've heard that they have a very similar model, or is it?
It is very similar, right? So Social Capital adopted that model, I think, a year and a half ago, where they now open their application and now they do data analysis just before they ask a business to pitch. So we kind of follow a very similar model where it's more data-driven VC instead of using that gut instinct. And that gut instinct is what kind of created this huge gap in the market.
Yeah, that's great. Yeah, and I love this aspect of data-driven investment, right? Like there's still a lot of gut feel when it comes to investing, especially at the VC stage. So like how you guys obviously have very specific, company types that you try and fund, but you remove a lot of the hesitation out of it. I imagine you look at cohorts, you look at margins. Do you examine the management team? Do you look at leadership team?
Yeah, of course.
Does that come into your decision, or is it?
Yeah, no. So we have private and public data, right? So private data is like the accounting, financials, payment processors, information if they use e-commerce SKUs. And then there's the public data, which is, for example, we scrape LinkedIn, Crunchbase. We looked at the team's profile, the advisors. We look at their age, for example, the sex, the degrees they have, the impact and historical impact of having a degree or not, for example, on the success of a business.
Wow, that's great. Yeah, so things that it's all publicly available data, so that's interesting, right? So like degrees, seniority, the leadership team, these are all things that you can understand from looking at a social media profile. That's interesting. I hadn't heard of that before. So you've also mentioned on the site, and this is where I want to dive into blockchain, right? You mentioned that you guys you're issuing tokens on the blockchain. So I just want to unpack that and understand how are you using blockchain technology? Yeah,
so we have a 5-year vision for our blockchain use. So originally started with a security token offering where we tokenize our equity to fundraise the capital that we need to deploy as revenue sharing investments. So that's one of the things we're leading. So we've been working with the Canadian regulators and our partners at Polymath, and Corl will be positioned to be the first in the world to do such a public offering. We'll be effectively a public company when we do so. That's tokenized. But our vision is basically expands to having royalty-based smart contracts and down the road adding wisdom of the crowd to our token, so where the community can vote if this is a good project or not, and our algorithms will take that in consideration instead of just relying on our data.
Yeah, that's interesting. So did you consider any other types of technologies? Like, why do you feel that blockchain is the way to go here, right? Because it feels like you're not necessarily obliged to tokenize when it comes to the equity that you're getting out, right? So what is the practical benefit?
Oh, for sure. I mean, one, it's more efficient. So instead of relying on share certificates and the old paperwork process you have to do with equity, tokenization allows this process to be much easier. Compliance, I believe compliance is way better because now it's on the blockchain. Share certificate is not going to be lost. You can probably identify who each individual is, how the shares are moving on the market. That's a different thing. And then also for me, like democratization, right? So there's people who want to buy one share or a fraction of a share, and you can't do that right now unless you tokenize. So if someone wants to buy half of a share in our company and indirectly invest in startups through revenue sharing, they can do that right now. So it's part of it is philosophical and what we believe in the industry, and part of it is operational efficiency and cutting cost. And I don't want to use the middleman. I don't want to have to use CDS and CompuShare and different middlemen that manage our shares and stock when I can just do it on the blockchain. Now, having said that, the regulators will probably end up forcing us to use some players like that, but that's part of the discussions back and forth.
Yeah. What do you feel actually the regulatory environment has been now that we're like, I want to say more, I almost feel like we're in crypto winter right now. What's the regulatory environment in Canada versus US?
Well, definitely the Quadriga case did not help the crypto market, right? If you see the CSA notice that came out, it's like as noted or as noticed with Quadriga, like every single statement is like as noted with Quadriga, we decided this, right? So like a recent big issue like that didn't help. I honestly think the Canadian regulators are trying their best to kind of move forward with things, but we're still behind in North America regulation-wise, and SEC and Canada, whether it's AMF, OSC. We're working with regulations from 1950s, if not even older, and trying to adapt it to technology in 2019. That's been the problem for a while. We're always trying to adapt the technology to the regulations instead of the other way around. Having said that, I think a lot of regulations has changed, whether it's the Crowdfunding Act or the Jobs Act. There's been changes there, but it's not enough yet, right? Because you still have to follow all those old school players. So like when you talk about tokenization, I mean, you have to adhere to that old infrastructure and your tokenization, but no one can support tokenization. So you have like a chicken and an egg thing going on.
Yeah, it's interesting. Who do you feel like more advanced and like internationally when it comes to deregulating these kinds of markets?
If you just judge, like, let's just take equity crowdfunding and peer-to-peer lending, they've been more successful in the UK more than North America.
Interesting. Yeah, I didn't know that. That's new information.
Yeah, like you have platforms like Cedars and like other peer-to-peer lending in the UK. They've done more businesses and more volumes than Canada or the US, right? I think it's don't forget that the UK has one of the top 4 watchdogs in the world, but they've been keeping an open mind. Like the UK sandbox was the first sandbox that was created, right? Now you have Switzerland coming in, you have France coming in, positioning themselves as leaders in fintech and blockchain. I think regulations are moving faster. You're seeing like more island regulations, like Barbados, Caymans, Gibraltar. Now, I have my concerns about those because it's also attracting bad businesses that are not abiding by anything. But you're also seeing law firms that gave up on the Canadian ecosystem. And like Canadian law firms gave up on Canadian ecosystem, and now they're setting up tokenization projects in Gibraltar because it's much better.
Yeah. Yeah, and going back to what you're saying about the Canadian landscape and Quadriga in particular, just like there's just so much bad PR and like the story itself. Like I didn't really follow the story; just I heard the tail end of it. Like, is the guy dead? Is he not dead? Did he die in India? And like, what happened to all the like $200 million?
I don't think he's dead.
It's a pretty crazy story. So yeah, I think it just adds, it taints a little bit the market. It probably puts a damper on companies, like Corl, which are trying to innovate, and I think it sounds like you guys are doing some very interesting things.
That's the thing with the crypto industry, or like I think any industry in general. Some point call it a bubble or not, but I mean, when things are going well, everything is benefiting. But when things go down, even the good ones will be tainted by it.
Yeah. And where are you guys at today? Like, what's the like your scope? How many companies are you funding? Any metrics you could share publicly?
Yeah, for sure. We have around 400 applications that went through our platform since August 2018. We have a funding pipeline of 75 million and above. That's applications that went through our pipeline and kind of submitted a full application. We haven't funded anything ourselves yet, as much as we've been working with referral partners. We have a royalty partner that we work with that's funding our deals. But like actual Corl investments haven't been made yet. So we're expecting that soon post STO. But in the meantime, we help our businesses. Like, so we just closed the business, for example, that couldn't fit a royalty model or fit an equity model, and we just got them like a traditional debt at a low interest rate from one of our partners.
Yeah, very cool. Well, very good. I wish you guys continued to. It sounds like a very interesting funding model. Like if I want to start an e-commerce company and like funding options are limited, the bank might not want to lend, and it might not be necessarily a VC-able business, if that's even a word, but I think you add another option in a landscape that I think is healthy. Maybe to zoom out and talk about what you think about blockchain / cryptocurrencies at a more macro level. What do you think of? Because obviously we're now, like I said, crypto winter, the decline of Bitcoin. I think the beyond the currency itself, which I think gets a lot of the press, there is still a lot of interesting applications of blockchain, like you mentioned. What do you see as the first potential widely known applications of blockchain? Which ones do you think they'll start, in the next few years, start getting more traction?
I mean, there's different angles for it, right? You're seeing, tokenization now is starting to become a big boom for that, where like you kind of transform the whole securities industry into the blockchain. But I think we're still a few years away from that until it becomes massively adopted. We're starting to see a lot of solutions about identity, like resolving identity on the blockchain. The thing is, there's a lot of good solutions out there, but I think it's about mass adoption. I don't think we're going to get to mass adoption, whether it's securities, whether it's identity verification, whether it's medical record or credit scores. I don't think we're going to get there because, one, we haven't made it simple enough to be like adopted easily, and governments and regulators haven't been making it easier. One thing I would like to see for sure go through is decentralized credit scores and decentralized identity, where I can go to an LCBO or an SAQ and just show like my decentralized ID, and then they swipe it, good, verified, you're good to go, right? I don't have to show actually my full government ID. I'd like to see that. I'd like to see blockchain kind of implemented more in the music industry. I think as our artists kind of now have better platforms and can protect their art or the music, blockchain will be a definite value there. But there hasn't been a lot of like platforms or with providing full blockchain solutions, except for like cryptocurrency exchanges or maybe using like loyalty or earning loyalty points by using your like crypto, right? So one company that I liked is ShakePay, for example, out of Montreal, and they allowed to use your crypto as a debit card. But then the whole industry turned around and now blocked that, and they had to pivot along with other businesses. That was one project I was excited about, still am, but this shows you how the industry is not helping, whether the landscape itself. But one industry that I'm bullish at is the tokenization, obviously, and moving credit scores and identity to the blockchain. And I don't think there has been a proper solution for identity yet. Everyone who's trying to solve identity ends up centralizing it on their servers. So it's not really decentralizing it. I'd like to see that. One thing I'm bullish on as well is tokenizing or like making currencies digital, right? So like you have the USDT or like the stable coins, right? I'd like to see more of that, so you're able to trade things easily. So we're hearing about gold backed tokens or UST or Canadian based backed tokens. Now crude oil tokens are coming to the market. But I just like the concept of make or die, which is a stable coin that's fully decentralized. It's always one USD dollar. And I like how they're doing it. They're operating based on a lending model behind the scenes, but there's no real cash behind the scenes that needs to be audited. It's fully decentralized. And I would like to see more of that decentralization of assets.
Yeah, so it goes back to like based on some kind of gold standard, based on some US dollar versus based on a true cryptocurrency, if I understand.
Yeah, like I'm not a big fan, honestly, of the current financial system of how you can just print money as much as you want.
Yeah. So speaking of crypto, what do you think is happening in the space that you think is not capturing enough attention or is misunderstood?
Well, a lot of people think that crypto is a way of kind of money laundering or fraud, right? So it's still the conception, and then the whole volatility is hurting people. So you got two people who jumped in on crypto, right? You had folks that really believe in blockchain as the future, and they went in, and these are the hodlers, and I'm happy to be one of those guys. And then you have the folks that just went in because their neighbor just got into crypto, and he's no longer their neighbor because he got rich out of crypto, right? And they just, I'm trying to go in on it. And as soon as the market went down, like these guys, their hands were shaken and just dropped everything, right? So they exited the market. I think that's the misconception that's a get rich quick model, which is way more than that, right? So that's why I differentiate between cryptocurrencies and blockchain. So the use of blockchain has a future. Cryptocurrencies will probably evolve. I'll always see Bitcoin and Ethereum as one of the stable ones. Others will come and go. Just because of the ecosystem that they've built. But I think the only way we can get to that mass adoption is by making it simpler, where any platform or any solution you're using, you don't have to market that you're using blockchain. Blockchain is happening behind the scenes. Like if you're using a website right now, do you know if they're using MySQL or some other database engine? You don't give a crap, right? And I think once we reach that position where I don't care what blockchain they're using, and if they're using blockchain, that's when you get to mass adoption, making it simple so that my grandma will understand it.
Yeah, exactly. When the big technology becomes kind of standard, just fades in the background, right? Like when you buy a TV today, you don't ask for a HD TV or you don't ask for a smartphone. You just assume it's going to have that baked into it. So I agree with you that the simplicity is not quite there. There's also the marketing angle of calling something blockchain or crypto. It's a marketing buzzword, but the mass adoption and the popular appeal is not there yet. Yeah. You mentioned quite a few interesting use cases. Which one do you think is the one you're most excited about? The one that you would say, if we had to do a friendly bet, the one you would bet the one gaining the most traction.
Coming from a lending background and my let's just say call them question marks around Equifax and the experience and the credit companies, I definitely want to see decentralized credit scores, especially in a country that has a lot of immigration. Where if I move from, the Middle East to Canada, the only way for me to build a credit score is for me to be in credit and default, probably. Yeah, that's the way for me to build credit, is by taking credit. So I'd like to see more decentralized credit scores. So if I do move from Dubai to Canada, I just have to give them my blockchain ID that has my credit score in one country and it will apply to the another country, right? So I'm very bullish on that. And I would like to see it more massively adopted by banks, by institutions, especially with the recent hacks at Equifax. And now Equifax is saying that they're going to sell data to banks, which is, for me, like I question those efforts, especially for a company that just had a data leak.
Yeah. Well, Sam, this has been amazing. Honestly, I learned a ton, and thank you for imparting such good wisdom. Maybe one last question is: where can people find out more about yourself and what you guys are doing at Corl?
Sure, yeah, you can go to Corl.io. So that's Corl.io. It's inspired by the coral reefs. I am a scuba diver after all. And if about me, I'm always on LinkedIn. Just look me up, whether it's through our About Us page or just directly on LinkedIn. You can ping me on LinkedIn, message me. I'm always available. I'm active on Twitter. I'm always talking about different things. So feel free to reach out. I always respond, even over time. So, but if you want to know more, just go to our website or just email us at hello@corl.io.
Very cool. Very cool. Well, thank you so much for your time, Sam.
Hey, thanks for having me.
Thank you for listening to the Point of No Return podcast. Never miss an episode by clicking on the subscribe button on iTunes or Google Play.